Good afternoon, guys. Good day, guys. Wherever you are tuning in from, it's your boy again, Sulaiman from MicroFX. So it's been a while. I dropped the video, but I'm here now. Let's get to the business. So my previous video, I was looking at this low here as the daily low. Actually, this is a daily time frame, right? The daily structure was bullish. Okay, we have this break of structure here. We have this here. We have this break of structure here also. Okay, so these break of structures indicate that yes, we are bullish on the daily time frame, right? We are bullish on the daily time frame, but here we have a choke to the downside, which is a sign that market is now bearish. From daily, market has switched to bearish. From my last video, I was explaining what exactly I'm looking for around this level. So now that if you look at our first break here was a week, so it didn't close. The second break was a week. The third break was a week until we get a break of structure somewhere here. Okay, so this is where the candle closes below the wick. So we don't count a structure as a break of structure until the candle closes below the wick. So if you see, this market closed below this low here. So now we are looking at a bearish market now on the daily time frame. Okay, since we are just normal day trader, we don't need all this long bias to determine what we are going to do in the market. So now we go to our trading time frame, which is what we are looking for here is just to know what exactly is happening on the daily. So if you look at daily now, daily has created this inducement for us here. Our daily inducement is here at this point. And remember, before we consider a structure, we have to take out the inducement. So on the daily, to consider our new structure, we need to get a inducement taken, because if you look at it from the top here to this low, okay, the moment this market broke this structure here, we are looking for inducement so that we can confirm this as our lower low, and this will be our higher low, our higher high. So now we go to, so now in anticipation, what I'm expecting is price could come up, take out this inducement, then we continue the downside. So that is my expectation. And what can we get? How can we trade this? Now we need to start looking for our unmitigated shadows order block. Okay, so if you look at this candle here, took out this liquidity, but this week is yet to be mitigated. This week is not yet mitigated, so we can look at that as our like as a potential supply. Okay, as a potential supply. So at this point, let's go to the 1 hour time frame. Okay, so on the 1 hour time frame, what are we looking at? Yeah, here was the last analysis I did. I was saying that if market wants to go higher to mitigate this level here, to mitigate this extreme here before going down, or we see a break of this low, then we retest something here, and the latter did happen. After we see this break in 1 hour, right, this took our inducement. Remember, inducement is key in this strategy. In this coming, I will be doing some market structure, how to identify structure. So basically, as I said, I like to see inducement happen before I confirm my low. So if this is coming down, excuse me, if this is coming down like this, I like this high to be taken before I confirm my low. So this will be confirmed as my break of structure here. Because why? Because we took out the inducement here. Okay, so this will now be a leg for me. So from here to here is just one leg for me. Some people will see this as break of structure. No, it's just inducement being taken. So that is how I trade. So now we took out this inducement. After we take out this inducement, then we broke structure here. The moment we broke this structure, we are looking for sell. Sell is confirmed. We are looking for sell. Okay. Now, as we are coming down, we didn't get our inducement. If you look at this, this is the structure here. This is just one leg, pull back. Because if you look at here, this previous candle, this new candle here, did not close or weak this previous candle. If you look at it very well. Okay, so because of that, this is just one leg. So this is our pullback. So if we are continuing to go down, this continues like this, okay, pull back. So until we get to this level here. If you look at this, we have something like this, and this got taken out. Okay. So that is structure for me. I don't know. So as we are looking at this now, from up here to this low is one leg. This here is one leg for me. It's not like break of structure here, break of structure here, or something break of. This is one leg. Okay, one leg. So it is one leg for me. So if we now look at it in a broader view, okay, see, market came here, took out this, because if you look at this candle, let me zoom in on this candle. Look at this candle here, took out this high. So that is a valid pullback. So that means we have structure like this. Like this is coming down. We have this. Okay. Then we took out our inducement here. So the first pullback is called inducement for me. So now, as we take out this inducement here, now we have our low confirmed. Okay. We have our low confirmed. So now on the 1 hour time frame, this is our higher high. Sorry, this is our higher low. Okay, this is our lower low. Okay. So this one leg confirmed because we take out this inducement. Assuming this market now shoots down from here after taking out this inducement, then this will be considered to me as a break of structure because we already took out the inducement. Okay, so now we can buy from here. We can buy from here if we get a confirmation to the extreme order block or order flow, unmitigated order flow. If you look at this order flow here, it's unmitigated. So that is a very good place to be looking for. So because this is inducement, after taking out the inducement, we fail to take out this low. That means market is looking for reversal to the extreme. So is either price, take out the inducement, mitigate the valid order block. And if you look at this junction here, any valid order block that we have is this one. This is a valid order block that we have. But this decisional order block failed. So if price did not react from the decisional order block, definitely it will react from the extreme order block, one way or the other. Okay. So now price took out this inducement, failed to respect this decisional order block to continue lower. So now definitely price is looking for upside movement. So if price did not take, there are two liquidity I look at. One is the inducement, and the other one is the engineer liquidity, very close to the extreme. So the bias is if price wants to go down, it should go down from the decisional order block. But since the decisional order block failed, close above it, then we can continue to look for buy till we get to the extreme order block. Or if the liquidity is taken out from the engineer liquidity, and if we look at it very well here, we'll see that all this candle, none of it closes above each other. They are just sweeping each other. See, this is a very good indication that price is looking for reversal to the downside. And from this level, if you go to the down to the if you go to the lower time frame, maybe the 5 minute or the 3 minute time frame for entry criteria, you will see that price give some entry here to sell to take out this low because we are bearish. That is the idea behind this move here. Remember, it's not compulsory to mitigate the order block. What is important is that liquidity is being taken out. Order block, order flow is not important. Liquidity is the most important thing in the type of strategy I use. Okay, so now we take out this. So we have another break of structure on the 1 hour. So now we have our break of structure on the 1 hour. Now we do the same thing again. We start looking for our inducement and we start looking for our unmitigated order block. We start looking for our engineer liquidity. So in this case, where is our inducement? If you look at this, we have this inducement being taken here. We have this inducement here being taken out, right? If you look at it very well, we have a pullback that took out this high here. So this becomes our valid inducement because we took out the previous candle. Okay, so now we took out the inducement. This would have been our lower low, but if you look at it very well also, you will see that this level here did not close below this low. So because it did not close below, we cannot consider it as break of structure. You understand? It did not close. This also did not close. So at this point, we can start anticipating that, okay, maybe price wants to go higher. So because of price come below this level now, so now in my strategy, what we do is we shift the inducement. So inducement will be shifted from this level to this level. So now our inducement will be shifted because price did not close below this candle. Assuming price closed below this candle now, we can consider this as our new lower high, lower low. You understand? And this will still be our inducement. But as at this point, price did not close below this low here. So we shifted our inducement. The moment we shifted our inducement, also our low will be shifted to this level. So now we have one complete leg like this. We have one complete leg like this. Okay, so all this is one leg. Then we see our inducement. You understand? This our inducement being taken out. This our lower high. This our lower low here. So now inducement is being taken out. What did I say earlier? When inducement is being taken out and price closes above it, we should be looking for buy to the extreme order block, or we should be looking for buy till we take out the engineer liquidity. So now what do we have? If we look at it from this angle, all we need to take a buy is to look for inducement. So now what do we have? If you look at this price, went higher. What is our decisional OB? We don't have any unmitigated order block here. Everything is being mitigated except this candle here. So we can look at this as our order flow, right? And look at this as our order flow. We can look at this as our order flow, and we can look at this as our unmitigated order. And here we can look at this as our extreme order block. Meanwhile, if you look at here, we don't have anything like unmitigated order block at the extreme here. Maybe on the 15-minute, let's see. Maybe on the 15-minute, we can see something from here. Nothing. Okay. So as at this point, we have only this order block here. So definitely we are waiting for reaction from this level. Okay. So what happened? From here, we got a market giving us idea that yes, I want to go higher. And if you look at this, we have this, okay, we have this pullback on this candle here. Then we have higher movement. So this came back to me to take out the inducement. If you look at it very well, let me show you. Let me show you. You see that this candle take this candle, but this candle also take this low. So it's a valid pullback candle wise. So at this point, we can take this as our minor inducement for the buy. Okay, so we got taken out. So how do we take this buy? We can go to the lower time frame to take this buy like this. See, this is our one candle, because this is our other block, this candle. Why? Because this candle take out this low of this candle. So, and if you look at it very well, this candle is being mitigated by this other candle here. So our other block can shift from that candle to this candle here. So because now we took out the inducement, we mitigate this level here, we can look for buy directly from here based on some other confirmation till we target this high. That is one way to take the buy from there. You can go to the lower time frame to get that entry. Normally, if you look at the 1 hour for the 1 hour for the structure, then 5 minutes we'll be looking for the entry. And if you look at what we have here, we mitigate that other block successfully here. After we mitigated this other block, now what do we see? We see that price came down, chalk to the upside, then mitigate this single candle order block here. This is a valid single candle order block. Okay, mitigate, then we start moving up. So we could have taken a trade from here based on continuation, internal structure continuation. You understand? So that is that about that move. I'm just trying to recap what happened during the week so that we can all learn one or two things from it. Okay, so that is how we could have taken this buy to this extreme. So I want you to have it at the back of your mind. This candle closes above the inducement, there is high probability that price will go higher. But if price just weak out the inducement, there is high probability that we continue going down. So now in this case, we have this move to the upside. So when we got to this level here, see how price reacted. This is an NFP move. This NFP move right here. So price reacted from this level. Then, so this trade, I took this buy. I didn't take the sell because I don't like trading NFT live, you know. So I waited for some time to take the buy up. Why did I take this buy? Internally, we are bullish. If you look at this structure, after we took out this inducement, till we get to this level, we don't have any other inducement. The only inducement we have is this right here. Internally, okay? Remember, this is internal structure. So after we took out this inducement here, what did I see? I see that price failed to close below this level, which is the lower low on the which is the higher low on the 1 hour time frame. So the moment this happened, I was like, oh, maybe price wants to go higher. And if you look closely at this point, you see have this unmitigated order block, and this caught my attention because it's sitting just above the daily inducement. So from my back testing, from experience, I realized that before price continue lower, it needs liquidity. So liquidity on the daily time frame is going to amount to a big move to the downside, because people are going to be seeing this as a break of structure. So if price goes up like this, people will see this as break of structure. Then people will be looking for buys from this level to go higher. But in this case, what I'm thinking right now is this could be a trap. Like we go to the daily time frame again. On the daily, this level here is our daily inducement. It's our daily inducement. We have this 15-minute order block here, unmitigated, order flow, unmitigated. So I'm thinking price could come next week like this, then we continue to take out this low because we are bearish. Another thing I'm looking at is price could go higher to mitigate this week and continue lower. You understand? So what I'm thinking for next week is we may see a buy early in the session, then later we see continuation to the downside. It's what I've seen noticed during back testing. So as at this point, this idea is what I have in my head for next week. So now after this happen, if you go to the, I'll just show you this trade. If you go to down to the 5 minutes, so after we see this move down, if you notice very well, before price goes down, it needs inducement. So after this drop down, where is our inducement? This here is our inducement here. That is our inducement. Okay, this is our inducement. So I have it in my mind that if price wants to go down, maybe price will come back to mitigate, to take out this inducement and go lower. I have these two scenarios because if you're in the market, live market, you need to be thinking buy and sell at the same time, but you have to know where the direction is ultimately. So what did I do? I was looking at this as one leg because price, this candle did not take this low, so there's no pullback. So this is one leg. Then we have this pullback. Then I'm looking at this as, okay, what's happening right here? After we sweep out this liquidity, I saw that this candle also took out this low of this candle, which is being mitigated here. Where is it? Yeah, this candle is being mitigated after taking out this low of this candle here. So I was like, okay, what is happening? Let me just keep looking at it. So I saw this high. Then the next thing I saw was this candle here. This candle also came, took out the low of this candle, just like equal low being taken out. After this candle took out this low, I was like, okay, I can like say risk something around this level. So I put this trade as a single candle order block because this candle, next candle, after this candle closed above it, this gave us a single candle order block, a kind of entry criteria I look at very well. So my entry was like this. I enter from here like this. Then I was targeting this inducement, probably this inducement. So at this inducement, I secure most of my profit and I let the trade go higher because I know that if this trade wants to go higher, it's going to come to take out this daily inducement. But I close because I don't like holding trade overnight. So I close my trade around this level because momentum is also dying and it's already closing of the New York. So that was the trade I took on Friday. So the major thing is you don't have to trade the news every time. Just wait 1 hour after the news, you will see a valid setup. So I don't trade the news, but I trade after the news, like 1 hour, 30 minutes, depending on whatever happens. I see a valid structure. So this is the analysis for the week. And what I'm looking for next week is simple. I'm still expecting price to do this. Let me just show you. So market is bearish on the daily, okay, but we need inducement to confirm the lower low on the daily. So this is our inducement. We have unmitigated order flow. So my bias now is this. Price may drive up to this level, sweep this level, mitigate this level here, sweep this level, close below, then we start looking for sell to continue the low to take out this daily low to make a lower low. That is one scenario. Another scenario I'm looking at is price could go up to mitigate this order flow, okay, then give us choke, then we create inducement higher, then we take this trade lower. Okay, another scenario I'm looking at is if this candle fail, then I'll be looking towards this unmitigated shadow to look for my trade from there to continue lower. So my bias for next week is bearish. Okay, my bias for next week is bearish. So I'm looking at price could come to this level inside the daily week, unmitigated week to sell. Price could come to this order flow here after sweeping this daily inducement to sell. And then we can close above also, then look for confirmation to continue going lower to take out this low. Ultimately, I'm bearish because the daily time frame says bearish. The 1 hour is bearish. As we can see, this is the high of the 1 hour. This is the low of the 1 hour. So if this place broke, this high broke, and then close above it, we have to look for confirmation like chalk, break, inducement taken out, then go down. If it got swept, then we can look for trade directly from there to sell to take out this low. So that's my bias for next week. I hope I wish you all best trading hours. Don't forget to like, subscribe, and share with your friends. I'll be putting out more content, and I'll be trying to show you how I mark up structure, show you how inducement work, engineer liquidity works. I'll be teaching, I'll be putting out some quality content, how to start afresh if you want to start trading afresh, what you can do, how you can go buy it. So don't forget to like again, subscribe, and let's push this channel to the next level. Thank you. God bless you.